FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Happy 2020. We took the week off. Actually, we took off 2 weeks. Something I've not done since I started the show in, hard to believe, in 2011, 9 years ago, nearly. But God, the break was so worth it. Family, friends, just traveled a little bit, just had fun. And I am totally renewed. The batteries are recharged. But let's see, what about the financial system? Are those batteries kind of going on reserve now? What are we going to see next? Well, you know that 2019 was just a phenomenal year for returns, especially if you were in the NASDAQ, the broader held, or I should say the smaller cap index. The returns were over 30%, and even in the Dow, the state Dow, over 22%. Can that keep going on, or are we hitting the limits of what even this incredibly hated bull market can provide? And what about consumer confidence, and how does that all tie in? Brad Williams with us now. So better to be a confident consumer and indebted, or lacking confidence and be unindebted?
Well, I think the key term there is the indebted or unindebted, because you're always better off unindebted. And whenever you take on a debt, you're making a claim on the future. You're assuming that you're going to pay that debt back. So you better have high confidence in your earning capability and your job future to continue that. So we're seeing, I think the consumer confidence dropped a little in December, according to what I've read. Not much, but it's still high considering the year we've had. I mean, we have a stock market year that turns into kind of returns. It's hard not to be somewhat confident. In fact, that's one thing that Washington's always figured out, is that if you're opening your 401k statements and you see it keep going up, you tend not to pay attention to things, so they're able to get away with more.
And Trump often is lauding the performance and how everybody's 401k is up and going higher and higher, and all these great things. But that can change on a dime, can't it?
Yes, and in spite of the great economy, we are still spending a tremendous amount of money and taking on a tremendous amount of debt every year. And that can't continue. The government's done a great job of sweeping that under the rug for so long. But one day, and we don't know when, that's going to rear its ugly head. And the amount of debt, when interest rates start to climb, is going to have a significant impact in our economy, and it's going to have an impact for a long time.
Yeah. So what do? Do they default? Do they monetize, inflate the currency? They've kind of been doing that all along, haven't they?
Yeah, I think it's more like inflate the currency, So, our creditors look at us. I think a lot of them invest in us simply because we end up being the policeman of the world in many ways, and it's cheap insurance where they don't have to have their own military. So they may shout at us in public, but behind the scenes, they're probably patting us on the back for taking care of something they didn't have to take care of. But as we're seeing in Iraq, that doesn't always work in your favor. So we're going to see that. We've got a lot of chinks right now in the armor of the economy in this whole Iran-Iraq thing. And oil prices have already gone up. Everybody's probably seen. I've seen the pump price in Alabama go up quite a bit over the last couple of weeks. And that has a damper on the economy, too. One of the things that we've had going for us is good consumer confidence. Earnings have been going up. Even blue-collar earnings have been going up. In fact, they're the fastest growing segment of the earnings growth from what I've read. And, your 401k is going up. Gas prices have been relatively stable and low because we've done such a great job of improving our performance in being energy self-sufficient. So there's a lot of good things going, but some of these world events can tip the thing over really quick.
You know, what's funny, Brad, is maybe part of the reason why working class, blue collar, maybe call them gray collar jobs, why the earnings are going up there is because we've encouraged all these people to go to college, and they don't want to work in factories. They don't want to do these jobs that often require physical endurance, stamina, strength. And as a result, the pool of potential blue collar workers has shrunk so much because they've all gone to college.
There's a lot to be said for that. And you would think that that would have an impact on the wages of waiters, because that's where a lot of those college educated kids end up.
And bartenders.
Waiting tables.
Bartenders too. Don't forget that. Yeah. Well, there's definitely.
But I agree with you. When you look at heating, air conditioning, electricity, plumbing, these things that people want no matter what the economy is, there's a real future in those kind of skilled trades. And it's like everybody wants to be the corner office guy and not the guy who wears blue jeans and gets his hand dirty, even though he makes a lot more than a lot of the other guys.
I got the job for the next decade, called here, nailed. Electrical service technical analyst or electric car fixer, because guys who, we grew up with, we're not that far apart age-wise. The guys who know how to fix cars, like they were dealing with carburetors. Now you have fuel injection. Now everything in the internal combustion engine, it's all computers, it's all electronics. But when you go to like Tesla and the new Mustang coming out and all these other cars, none of the knowledge that you had on how to fix an internal combustion engine, like if it was one of the cylinders was missing, or you have a problem with your fuel pump or your water pump, none of that has any relevance. Instantly, hundreds of thousands of guys, if they don't go for the additional training, are dinosaurs. But if you know how to fix a Tesla or any of these other electric cars coming out, because you have to also do it differently because you got 220 volts running through the thing. And, there's a whole different protocol, like when you're working on it with gloves and disconnecting the batteries, all these things. So this could well be the job of the future that will pay a nice six-figure income. Right.
Yeah, I agree with you. That is going to be a skill of the future, and it's technical. So you're going to need to study. You're going to need to go through some schooling, but it doesn't have to be college. I think we've talked in the past. College has turned into a big racket that only benefits
scam
the universities and the professors, and they don't care whether you get whether you get an education or not, as long as you pay your tuition. In fact, a lot of colleges don't even grade anymore.
What's a grade? What's a grade? Who needs grades? We don't need no stinking grades, right?
Yeah, that's right. We don't need a stinking grade. So you're right. Looking at the future is going to be the key. And that's important, is looking over the horizon. Always be ready.
Hey, if I were a younger man, I would go to school, technical school, and learn how to fix a Tesla. That's what I would do. Really.
Yeah, and you'd have a wide open future.
Yeah, very little competition, minimal competition, and increasing demand, which will lead automatically, if I'm any good at it, assuming I want to be good at it and learn what I need to learn, automatically that will result in increased income potential over the years, because today's current crop of auto mechanics, a vast portion of them are going to be knocked out. Now, granted, electric vehicles somewhat more reliable, their components, less moving parts and all that. So you might need less of these people, but in all likelihood, there's still going to be accidents. There's still going to be plenty of demand for these skilled people.
You're right.
Yeah,
as we've been talking about, it's all about skills, having the skills, and it's not just going to get a degree in conceptual things about business. It's about what to do with something.
Yeah, agreed. So looking at it here, what are you seeing for 2020 if you look into your crystal ball?
FSN Radio. It's all about what's next.
Otis Gold Corp is a gold development and exploration company with quality projects in the pro-mining state of Idaho. Otis's flagship Kilgore project has a resource of 961,000 gold ounces, and its recently published preliminary economic assessment demonstrated an impressive post-tax IRR of 53% at $1,500 gold. In addition to the significant expansion potential at Kilgore, Otis is exploring its highly prospective Oakley project. This Carlin-type gold deposit already has an inferred resource, and previous near-surface drilling intersected 123 meters of 0.69 grams per ton gold. Otis Gold Corp trades in New York under the ticker OGLDF and in Toronto under the ticker OOO. That's triple O. To learn more, go to otisgold.com. That's otisgold.com.
The Financial Survival Network. It's all about what's next.
Well, I would be very surprised to see the kind of returns in 2020 that we got in 2019. I think it'd be great if they were there. I just don't see it. We got a presidential election that I think is going to be probably one of the ugliest that we've had to deal with. And, we're at a crossroads in our country right now, how we deal with foreign policy, how we deal with the economy. And I just think that this year is going to be tougher than last year, but we'll see.
I think you're probably correct, but it's not unusual to see 2 up years in a row. We've seen, look how many up years we've had, 10 up years in a row, right? So how much longer can this thing go?
You're right. We had 10 up years in a row, and that goes past the averages of that type of market. But you've also got to throw in the fact that many years in that 10 years, a lot of the market growth was driven by 0% interest rates. Mm-hmm. So money goes where it's most appreciated. And with interest rates being so low and the banks not being able to give a decent rate of return, a lot of people took on risk to get a better return.
Yeah. Yeah. So you got to be a little wary this year. Where do you safely park your money here, or at least a portion of it, so you don't get rolled over?
Well, I still think having a balance between safe money investments, moderate risk investments, and risk investments is still the best thing. Being wary of bond funds, looking more at individual bonds, because bond funds, if interest rates start going up, are going to be problematic. And that's where most people go for safety during a downturn in the stock market. With interest rates being artificially low for the length of time they have, I think that's going to be problematic. But you buy an individual bond, hold it to maturity, you don't have to worry about the value eroding. So there's a lot of income-oriented investments to look at. There's a lot of places to go other than just stocks and stock mutual funds. So it's just knowing where those are and what they're going to do for you and having a balance between all of them.
Yeah. So how likely it is you think we'll have a pullback in the markets?
Well, it's one of those things that it's like gambling. You're on a roll, and the dealer keeps sending you the right cards, but you don't know when that shoe's going to turn on you. And the longer you go before the shoe turns on you, the more apt to be that the shoe's going to turn fairly quickly and not much later.
Mm-hmm. All right. I understand what you're saying. I think it's probably correct. And don't you think it's pretty amazing, though, how the consumer confidence level has stayed up there all these years? Like getting higher.
Yes, and it's gotten real good in the last 3 because we've got an administration that's pro-business, and that's been a shot in the arm for the economy. Agreed.
Well, exciting year ahead for sure. 2020. We're starting the roaring 20s of the second millennium, and that in itself is exciting. The world is getting crazier, geopolitical tensions, etc. I guess we're just going to have to sit back, Brad, and see what happens next. So we want to find out more about you, connect to you through the web. Where do we go?
Well, it's pretty easy. If you got a financial question, just ask bradwilliams.com.
All right. AskBradWilliams.com. There's a link in the show notes to Brad's site. Just go ahead and ask, and Brad will answer. Brad, really appreciate you coming on. Any questions or comments, email us, kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page, Financial Survival Network, and of course, our home site, financialsurvivalnetwork.com. Brad, a pleasure. We'll talk to you again real soon.
Okay, me too. Thank you.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.